And we're live. Good evening, Nathan Araya. How are you?
Good evening, sir. How are you today?
I'm good, man. You got to keep that volume. I'm good, mate. How was your day?
It's been fantastic. It's been an extremely productive Monday, like usual. Definitely staying busy, regardless of the times that we're in. How about yourself?
Mate, it was a bit busy here and there, all the way from Narrabeen up to Manly, mate. It was just a good day, good busy day. It was beautiful weather we had here on the northern beaches. So I guess the $1 million question is, Nate, what will the market do leading into the new year? What do you foresee it doing?
What do we see it doing? I mean, it's been interesting. I mean, because you and I both work in different fields in the real estate industry. You're focused
Yeah.
more so in the residential side of things, more so here in commercial. And I can definitely give you a viewpoint of what I've seen in the past, let's say 6 8 months now, leading to 2021. Goodness me, the retail element in commercial leasing has definitely declined, and that's definitely obvious signs due to obviously all the lockdowns and the restrictions that we've had around COVID.
Yep.
It's definitely not made a lot of potential tenants that they're very confident into entering a new lease and starting something there. However, what I have noticed though is, okay, yes, COVID is a thing. We're definitely not living with it, but we can definitely see that there are people that are starting now, definitely starting to become confident in the realm of retail, whether it be now in the form of food. And I mean, because we can't live without food. Food's definitely something it's going to keep us going. And so with people finding businesses that revolve one around food, potentially utilizing sources of online shop,
Yeah.
having a shop presence, having your items there, but ultimately using the internet as a source of your overall marketing and getting your products out there is definitely what I'm starting to see. And it's a good trend because we don't want the retail element to decline completely.
Yeah.
But it's saying that's obviously seeing it in a leasing perspective. What we're seeing still though is the buyer's market still fairly strong. And I think you'll even agree on your end in residential. People would find it more comfortable purchasing as opposed to entering a lease. At least then they have the freedoms and they won't be confined by a lease and be able to do things that they want to do and need to do. And whether it be they've got to wait out that lockdown period or so, they can get grounded, build their foundation around their business and focus on it once all this thing comes more or less back to normal, whatever that looks like.
Yeah. Well, that's it. Like I spoke to a few of the property managers we hear in our big team, and they were all chatting, and all of the kind of new leases they've signed their tenants up on are 6 months, 9 months, kind of. They're shorter terms. They're not the traditional 12-month windows, because a lot of tenants kind of want a bit of flexibility at the moment because we don't know what's going to happen. I wish we had a crystal ball. I wish we could tell everyone exactly what to say, but it's a bit hard sometimes. So.
Yeah, it definitely is. And I think at least, I mean, because for landlords, for owners, it doesn't stop. In the leasing side of things, it does not stop for them. And it's almost good to kind of remind them that something is ultimately better than nothing. Having your property sit there completely vacant for X amount of time isn't ideal for you. But where we can friendly remind them of and give them confidence that we can find a tenant out there that's willing to wait the storm and to really push for something that'll work for them. You could be fortunate that, okay, retail, we'll probably be testing the waters and gone for a 6-month lease, 12 months lease, 18 months, whatever it looks like, just to get your feelers out there and see if it'll work and see if it'll survive. Whereas also noticing though, excluding the retail side of things in commercial, storage still big. People still want storage, people still need storage. And I think even with the circumstances we've been in with COVID is people buy a lot, people tend to store a lot, or people have the time to go through the things in their home and realize, maybe we've got a lot. Let's see if we can outsource a bit of the space.
Yeah, well, if you look at the trends and everything, that kind of in the last lockdown, we saw a lot of transitions of lifestyles. So we saw a lot of CBD lifestyle changes, people moving from the city to the northern beaches for more of that kind of beachy lifestyle because you didn't have to be in the office. You had that flexibility to work from home. So that's when I personally saw an increase in storage because a lot of people were moving, but the move was temporary for them. They wanted to capitalize on what they were seeing happen. So they had all this stuff and they didn't know where to put it.
Exactly. And so when we've been really fortunate with some of the spots or the properties that we've had along the beaches to offer that for people, it's really been fortunate. We've also noticed as well now, I've personally noticed is, okay, there was definitely a good point of late 2019, throughout of 2020, and now obviously now in 2021, I've been in the real estate industry. I can see that the transition of working from home to, goodness me, I can't work from home anymore. It's borderline doing my head in, and I need to really put a lot of emphasis in the business that I'm growing and creating all at the same time. People now need office space. People need to get out of their homes. And that's a good trend to see now happening, as opposed to people getting overall comfortable in their homes. I mean, your home's your sanctum. It's your place to keep yourself sane, more or less get your sanity. So blending those things together, okay, may have been good in the short term, but in the long term now, people are seeing that it's just not working. Let's outsource. Let's get some space again. And so that's going to be a trend to see.
Well, that's it. And if you kind of look over the trends of kind of the past 5 years since 2017 in both the commercial and the residential markets, you kind of saw pretty much on par. There was always about, just to give everyone a share, let everyone know kind of what's happening when we do mention, hey, there's low stock on the market. Hey, there's not much around. Just to kind of give you a number to put in your head. On average, there was always about 130 to 150 properties on the market for sale for commercial, all across the whole of the Northern Beaches. As of the 24th of August, there is only 85. Now, if you flip that over and you say residential sales, traditionally in kind of high markets in 2017, we were sitting at around kind of 800 to 750 properties in the Northern Beaches for sale at that time. Traditionally, when we hit the bottom of the market in 2019, so I'm just having a look at my stats for a second, we were at 567 at the bottom of the market there. Now, today, there is 420 properties on the market for sale across all of the Northern Beaches. That includes new developments that are going up, pretty much anything on realestate.com, and pre-market portals on such places as novac.com.au and Instagram. Kind of everything we can flat. Look, some things might slip through the cracks, but just at a rough number, we're sitting at 150 less properties than the bottom of the market. So when there is no stock, there's not much options and there's not much opportunity. However, the residential lease market is sitting at a very consistent number at around 550, whereas when it hit a very lull and the market was flooded with residential leasing properties, it was up at about 760 available across all the Northern Beaches. So as you can see, everything's kind of at a high demand right now due to a very high demand of lifestyle changes. What do you reckon, Nate? When you hear those numbers, what do you think?
Well, it's a lot to take in, but it's also good to see in that perspective where you see that as a steady stream. You see people definitely, really looking into their lifestyle choices, what they want, what they need, and it's good that people have choices. That's ultimately what you really want at the end of the day. And I think the question for you is what you've asked me is, where do you see it going from here? What angle are we going in? I mean, it's a big one.
I know what you mean. Well, we actually ducked around the office a little bit earlier this evening. We asked a few of our colleagues where they see the market going as well, just to give everyone a broad range of opinions. And I'm actually going to rattle off some audios at the moment from my colleagues. They'll introduce themselves at the start. If you can't hear it, just drop a comment and I'll see what I can do to fix that. But I'm just going to play some audios. They'll introduce themselves and they'll tell you where they see the market moving towards that new year.
I like it. Let's do it.
Stevan Bubalo says, I would expect, based on the last lockdown, we saw a surge in buyer demand and, of course, property prices. This time around, the general public are a lot more informed and maybe a little bit more relaxed going through the lockdown period. But when you're looking at very low stock levels, very low interest rates, and the focus of lifestyle living now as opposed to CBD proximity living, I think we're going to see another strong run in the property market. I think if we see this lockdown end around the October timeframe, that will happen before Christmas. If not, I think we'll see a really strong surge to the first quarter of next year.
I think we're going to see gradual increases in the housing side of the market.
So this is from James
not
as well.
As fast as the growth that we've seen in the last 6 months. I think we're going to see apartment prices begin to skyrocket and close the gap between houses and apartment prices.
Can you hear that?
We study history at school because we believe that history repeats. I think that history will repeat itself again. The 2020 lockdown, after things opened up, we saw prices go up, more properties come on the market, a lot more activity in the market, and I think we'll see the same occur when restrictions ease in Sydney. There'll be more stock on the market. However, I don't see that will cause a reduction in prices. I think there'll be government stimulus as well, get people buying, moving, renovating, upgrading, downsizing, get stamp duty coming in, and I think we'll see the market go up. What percentage? I think probably another 5% across the board, and I think that will run for a little while as well. Cheers.
If I had a crystal ball, I would say going into the end of the year, we will see market growth of about probably 5 to 10% for units, maybe a smidgen more, probably about 5% for houses. I think more stock will definitely hit the market because a lot of customers are saying they're going to be hitting the market when COVID shutdowns are foregone. So it'll be a nice busy period for real estate. A lot of people buying, a lot of people selling. I like at the moment that you're selling in isolation unit and you don't have a lot of competition, but certainly some good rental increases as well. A lot of people are leaving the northern beaches, but a hell of a lot of people are coming to the northern beaches from your lower North Shore, your upper North Shore, your eastern suburbs. So your Vaucluse, your Cremorne, your Bondi sort of people. A lot of them are heading into the beaches.
Hey guys, Lisa Novak. My property prediction for the remainder of this year, I think we're going to start to see house prices start to plateau out for the moment. Apartments, we're going to see them continue to take off for the moment. Then I think things are going to plateau momentarily. And then as soon as these restrictions start to lift, I think we're going to start to see an explosion in the market again.
Michael Bergio here, and my property prediction for the remainder of the year is we're going to see a lot of smiles and a lot of broken hearts with low stock levels continuing. More demand on prices will make it harder and harder for buyers to get into the market. More buyers will do their due diligence, but unfortunately not secure a property, which will cause a lot of frustration in the market and in the buyer pool. Yes, this will create an uptick in prices. Therefore, there will be a lot of happy families who are selling for a big windfall, but they may also have the sad faces when they can't necessarily buy in the market. So we're going to have a very interesting time, but along with what my colleagues have said, low interest rates, low stock, big prices, but let's not forget the buyer side of things as well. So buyers will have to be educated, maybe seek buyers agents to help buy, because when prices are up, more people competing, the more people miss out on the property to purchase.
So yeah, those were kind of our local experts here at Novak. And after hearing that, there was pretty much a uniform response across everyone's foreseeing when the lockdown restrictions lift, we can expect another boom similar to the one we experienced in 2020 post-lockdown. What do you think, Nate, on your commercial side? Do you foresee any changes, any major developments there?
Look, I definitely see that, again, tying in with a lot of what was said, a lot of people will be more relaxed. A lot of people will do their due diligence and be able to see exactly what they want to do. I definitely think there'll be a boom in the retail sector. I think people will be smart enough to know exactly what they want to do and how long they want to do it for. As far as buying things go in the commercial sector, I definitely think it'll still be strong. Stock will be low, and I believe that will still remain to be the case. I definitely will see prices, they might spike a little bit. I don't think they'll spike as much as the residential side of things, but it will definitely push for buyers to get out there, get the feelers out there really, and test the waters and see, one, can they secure themselves something and foresee another potential lockdown and be able to have control of their asset, as opposed to, getting into a lease that's just going to get them nowhere. What do you think, Zach? What's your angle on everything you just heard?
Well, look, I wish I had a crystal ball and my information would be 100%.
Yeah.
I see happening in the immediate future leading up to the end of restrictions is we're going to see a little bit of a boom further in apartments, and as they close the gap towards houses, because the real estate market's a little bit like an elastic band. Median house prices are always up here, and apartments are always in relative to that. And originally we had the spike of the house prices and we saw that soar. And there was almost a no man's land in between that kind of 1.8 median prices, that 1.8 to kind of 1.5 mark. Now we're seeing 3-bedroom apartments start achieving that price. The 3-bedders start achieving higher prices, the 2-beds follow, then the 1-bedrooms follow, and so on and so forth. So we're going to start seeing that lower end of the band come back up to adjust itself with that booming house market we saw earlier. That's what I kind of foresee for the immediate future. For the long-term future, when the restrictions lift, I do foresee another jump of about 7.5% across the residential market. And just to prepare for that boom that kind of everyone's expecting to happen, what are kind of 2 key tips you'd suggest to a prospective tenant or a prospective buyer to help them secure a property if they're looking in the future when it does boom as we've foreseen?
Looking into the future, let's be prepared. Obviously, financially, it's one thing to have a brilliant idea, have a business model that's definitely great on paper, but you need to foresee it long term. Having a long-term thing, a long-term key goal is definitely the important part here, and making sure as well, it's one thing securing yourself a property, but making sure that it's in the right place for you and your business. There'd be nothing worse is to get yourself a site. Yeah, it may be great in price, you've locked in a great lease term, and then it's just not where you really wanted it to be. Do your homework, as best as you can, be confident in the area that you're obviously going to seek, and obviously the business that you wish to push from there. And look, that's my real brief opinion overall. But on your side of things, I think it'd be pretty interesting to see some record-breaking apartments getting sold. I think there was one recently that one of our colleagues done, which is just amazing. Going for just under $1 million, and within a short amount of time, racking up such incredible value. It's incredible to see. So it'd be definitely fun to keep an eye out.
Well, yeah, there's been some great stories in the immediate future. So there was actually a 2-bed plus 32-story house in the Meridian complex at Pacific Parade that sold originally with my colleagues Lisa and Michael for $920 back in December 2017. Do forgive me if I get the months wrong or anything. That sold 2 weeks ago for $1,565. So in the span of 3 years, they've seen almost a growth of $600,000. Just to give everyone perspective on what the market's doing. And we're seeing entry-level apartments now in places like Narrabeen, Collaroy, being around that $1 million mark now. We're seeing that being the normal for a 2-bedroom apartment. And Freshwater, that normal is about 1.1 now. Traditionally, it was around $850, $900. So that's where the price points just keep moving. And if I was to give any advice to any prospective purchasers out there, is get all your ducks in a row before you go out there looking and potentially break your heart. Get everything lined up. Just because, just get everything ready, because when you find that property that you love, and normally it's the first one you see, because that's the one that got you out of your house to have a look at. So just make sure you got everything ready and you can jump on that one you love, which would be my recommendation.
Let's get your ducks in a row. I remember that one.
So anyway, it was beautiful chatting with you, Nate, tonight. That's kind of where we see the market going in the near future, kind of a little bit further than that. Any last words?
Look, we could be right, we could be wrong. The future's unknown, but we'll see what it brings, and we'll be definitely optimistic as always, and push to see some incredible results.
100%. Everyone else, enjoy your evenings. Got any further questions, feel free to reach out. We're always available here at Novak. See ya.
Take care.